This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome back to your podcast highlights for the week of August 12th through the 16th of 2024. A week that began very well. Up day on Monday, but we didn't know for sure how that was going to play out. A lot of times you reverse the Monday trend by Friday, and we knew it was going to be a very busy week. Lots of economic data, lots of geopolitics hanging over things. But when the week wrapped up on Friday the 9th, on our subscriber podcast, we discussed how gold didn't look half bad. It had bottomed out on Monday. It had held its 50-day moving average through Thursday. Then it began to rally on Thursday the 8th. And on Friday the 9th, actually finished the week back above the 20-day moving average. I told everybody on the site, that means we're probably going back to the top of the range. And as trading began on Monday the 12th, it looked like maybe that was a possibility. And here's all part of what we discussed that day. Here is December gold. Very near a breakout. Okay, right at the all-time closing high. I think that's from about a month ago. It was like 25.14, something like that. That's a COMEX close. So we're not quite there. But remember, if you listen to Friday's podcast, we talked about how last week was very encouraging. Those 4 days last week, holding the green line, the 50-day. And then in a rally Thursday afternoon, getting back above the 20-day and holding it on Friday. And I said, now that we've done that, we're pretty likely to go back to the top of the range. And now here we are. Will we break out? Will the fifth attempt be the one that does it? Mining shares have been in a downtrend for the last couple of months as well, but they've been picking up too after the lows back on Monday, August the 5th. All right, because the GDX started to look like it was going to break its downtrend. Again, this was all from Tuesday, August 13th. And then finally the GDX. Like I said, this might be the best news of the day. After the 3% rally yesterday, because gold was up, and okay, Barrick's earnings or whatever, and a big buyout, okay, all that stuff. You'd have thought with gold down and silver down today, or gold unchanged at least, that the shares would have been dumped. Okay, it had a big red candle. Instead, we have a green candle and another 1.5% gain. And in fact, looking like it wants to break that little downtrend line. So let's see what kind of follow through we can get tomorrow, which again is why I was waiting to see the Franco-Nevada earnings. Everybody sees them. Add them tonight to the comment section if I don't do it. Because you get a little more follow through tomorrow. Maybe a weak CPI report, a good day in the metals, we could be north of 38 again. And as you can clearly see on this chart, that's a level that we want to regain. But again, first and foremost, just a good sign. Good sign that the shares were up today, at least as measured by the GDX. On Wednesday the 14th, I was emerging. A move to the top of the range and then 3 red candles in a row down. Tuesday had produced a red candle, and now Wednesday had produced a red candle too. Would Thursday be the big red candle, third one in a row? Well, we'd have to wait till Thursday to find out, but it was something that had our eye there on Wednesday the 14th. Gold on the daily chart. Again, I alluded to this earlier. Why would you think they're going to come and beat the crap out of us tomorrow before we flag a little bit? Well, here's why. This is now the 5th time that gold has tried to break out and gold a new all-time highs. Well, really, you could say 4th. It went up first in April. And now in the 4th time since, you get hard capped with massive new open interest. I could have put those numbers on there too. But then notice, it's a green candle followed by 3 red ones. See that in May? 1, 2, boom, 3. Takes out the red line, the 20-day moving average. Middle of July, back up here. Green candle, 1, 2, 3, boom. Then it flags, then takes out both moving averages. Earlier this month, green candle gets up to this level, boom, 1, 2, 3, bang. Takes out the 20-day moving average. And so here we are again, green candle up to this level, 1, 2. I mean, bankers aren't complicated, right? They know what they do. They know what the tricks are. if this works, why wouldn't they keep friggin' doing it, right? So why wouldn't we get a big red candle tomorrow that takes us down at least to the red line, which is 24.60? Well, that's only $26. But eventually down even to where the green line is, which is kind of covered up by the blue trend arrow. So that's what I'm saying. If we can get a dip to 24.30, 24.40, I'm buying the fucker. I mean, I didn't buy the last one because I was too, a scaredy cat because, the yen carry trade. I'm not going to make that mistake next time. Turns out there might not be a next time because instead of going down on Thursday, prices did fall. They fell 30 some odd dollars from their highs at the COMEX Open, but then prices reversed. We didn't have a red candle after all. Silver picked up too. Silver had a heck of a day on Thursday the 15th, in part because copper has started to look a little bit better. So a little change of pace here on Thursday the 15th. Let's take a look at that chart of COMEX copper. And finally, I promised you an update on copper. Now look, I thought we were looking good back there in early July, right? We'd come all the way down from 517 to 435, and then we rallied, and we're back up to 470. You can see where 470 was resistance. Look at those highs back in early April. And then what happened? We rolled over, lost, almost 20% from there, from 470 down to 390. Now, we've turned higher. It's been a good 6 or 7 days in copper. Is it turning the corner? Maybe. Is it going to be like a little reverse head and shoulder? You see the first shoulder right there in late July, early August. You got the head upside down from last week, and now here we're moving back up. Maybe. Well, we'll watch. 420 is obvious resistance. That trend line down from the peak on May 17th, that's going to be to 420 pretty soon. Be very interesting over the next 6 or 7 days to see what copper does. On Friday, August the 16th, a tremendous, nearly $50 rally in COMEX gold and spot gold put both numbers at all-time highs as we wrap up the week. Week started great, and it ended week 2. As you can see on this weekly chart of the spot price, we have ourselves a clear breakout, the range that price had been in for about 4 months. But not only did it break out and make a new closing high, be sure to note that the finishing price for Friday is higher than the previous intra-week high from back in July. That's very bullish in my book. It's one of those old adages we have at TF Metals Report. You finish higher than the previous intra-week high. That's always pretty bullish. So it looks like we're off to another good run here in gold. Certainly not straight up, but a lot of folks have their next target up near 2650 and 2700. We'll see about that, but as we go into the weekend, I think we should all feel pretty darn good about $2,500 gold. Thank you for listening to the TF Metals Report podcast highlights. Again, this is just a little snippet of what we do every day at TF Metals Report. Now's the time to join, for crying out loud. It's only $15 a month. With gold prices soaring, silver moving up, metals, the mining shares, everything looking good, you should join us. Again, $15 a month to join TFMetalsReport.com. Thanks for listening and have a great weekend.